In this video, I'm going to be breaking down Kaspa. I'm going to be showing the chart patterns that I'm seeing on Kaspa right now. I'm also going to share where I think it could be going in the next couple of months and where I'm going to be potentially buying. If you like this type of content, make sure that you subscribe and hit the thumbs up button if you find something useful or if you learn something new. Let's jump right in. So I am looking at Kaspa on a weekly time frame, and I'm also on the logarithmic scale. I like to use Elliot wave in my technical analysis. For whatever reason, the way that my brain works, I'm able to look at Elliot wave and see kind of what's happening visually. So that's kind of what works best for me. But of course, do your own research, do your own analysis. This is just for entertainment purposes and not financial advice. So when it comes to Elliot wave, the pattern that I see on the chart happening right here is called an ending diagonal. This is one of the most common patterns that you will see inside of Elliot wave, and it is a 5-wave structure. It's a 5-wave structure that's moving towards a point. It starts a little bit wide, then moves towards a point with 2 converging lines. And you've got different waves inside of that. So we've got a wave 1 that sets kind of the top of the trend line. Then we come down for wave 2 that sets the bottom. Then we go up for wave 3, 4, and then finally wave 5 before usually it starts a reversal pattern. And so that's exactly what I'm seeing on Kaspa right now. So let me draw in those 5 waves. So we would have from here, wave 1, wave 2, wave 3, wave 4, and wave 5 right here. And so you can also look at this and see that it's kind of an ascending wedge pattern as well. That's more of a traditional technical analysis pattern, but I think that the Elliott wave pattern fits because it literally is this right here. Now, usually when we get this pattern, towards the end, we will then start to see a drop off and a break below. That's typically what happens. And obviously that is what's happening right now. Price came below this trend line. It broke down with this big red candle and went below the moving average, came down, it turned around, and it retested, or it's retesting right now. This is also common when we see a break on this ascending wedge pattern or this ending diagonal. A lot of times price will come down, it will come back and retest, and oftentimes it will actually continue down. And so I know this might be a little surprising to some people who are really excited about Kaspa right now and are looking for price to continue to go up. And it certainly can. But for me personally, I actually think it's going to be going down a little bit further, but not for long. I do think ultimately it's going to break these highs, but not before it goes a little further down. And so let me draw in a few things that may help explain why I think it's going to go down. So we have the Fibonacci retracement tool. This helps me to, not just me, but in general, it helps to find different significant reversal points of support and resistance. And in this case, it's going to be for support. Now, what you would do in order to draw a Fibonacci retracement tool on your chart is to go to the most recent big swing low and then take it up to the swing high of an entire wave. And then that's going to measure with these different lines, these different levels where price comes to reverse. And as I mentioned before, I'm on a log scale, and with these Fibonacci retracement tools, it's important to understand the difference because sometimes when you're looking at a log scale, these lines will end up in different spots than when you're on a linear chart. And so we have a couple instances of that. So looking on the log chart, we obviously have price going up, it breaking below this trend line, it's retesting, which it could blast through and continue on, but I actually think it's going to come down a little bit lower, because with this wedge pattern, this rising wedge pattern, which can also be seen as a ending diagonal in Elliot wave, a lot of times the price will once it breaks down, it will kind of come to the bottom of, or the start of, where that wedge pattern formed. And so one way where we can measure this is by measuring the distance of the widest part of the wedge. So the top all the way down to the bottom, measuring the widest part where we had price make a high, and kind of where the bottom of that trend line was. And then once we take that and we put it at the place that the price broke down or broke out, that gives us a price target to the downside. It doesn't always go there, but using the pattern and the price targets, we can kind of predict where we see price going and see if it's going to go there. So let's go ahead and measure from the top where it started all the way down to the bottom. This is the widest part of the wedge. And so if we bring it to where price broke out, it puts us right at the 0.618 Fibonacci level, which is one of the most common retracement levels in Elliott wave, or just in price action in general. And with this retesting, and my belief is that it's retesting this trend line before it comes back down further, I do think we'll see some more downward movement. And I believe the downward movement will bring us to around the 618 level. And if you see on this diagram right here, you will see that a price target is set actually below what would be the wave 2. It's set below that. Does that happen all the time? No, but this is just a reference and a guide. And so we have to look and see, well, where are their confluences? Where are there these different aspects of what we see in price and with price targets that agree with each other? That's another way of explaining it, where they agree with each other. So we know that 618 retracement is a common retracement level. We see that this has broken out, and a price target is usually, the price. We measure the price of the widest part of the wedge, and it's coming down exactly to the 618. And we know that, at least what I'm sharing, is that I've seen many times where the breakdown will happen, it'll retest and then continue further. So that's why I believe that we're going to see Kaspa come down somewhere around what would be the 6 cent level. In between 6 and 7 cents is kind of where I'm thinking we could come. So I am not looking to buy in until we definitely pass below 8 cents. It's just not happening for me. 7 cents would be better, but I would not be surprised if we get price to come into this area right here around the 618 level. And so I'm actually going to be holding out until then. I think this is a great looking pattern. I think that there's potential for it to go up, but not before it comes down here. So that's what I'm going to be looking for over the next couple of weeks, next couple of months rather, just because it may take some time for it to do that. But once it does, we can literally see this go parabolic potentially. And at that time, we'll have to do some more analysis of where I think this is going. But for now, I am actually bullish on this, I'm actually bearish on this one. I am not bullish yet. Now, I can obviously be wrong. This is just probability in what I'm seeing based upon these different patterns, but I have a conviction that we're going to see price move down just a little bit more, and that will actually present a good buying opportunity. So if you want to get into this, if you like this crypto, of course, sure, you can invest some now, but if you don't want to worry so much about timing, then maybe dollar cost averaging. So just continuing to buy some here and there as it moves forward, as it moves down, or if it moves up regardless. So you're getting in at different price points. And so you don't have to be so worried about timing it at the right place. But for me, I am definitely waiting to start dollar cost averaging until we definitely get below 8 cents. And at the time where if we get around 6 to 7 cents and we see some signs of a bullish reversal, then I'll look to get in a little bit heavier. So hopefully that this was helpful. Again, this is just my own analysis. Do your own research. This is not financial advice. This is only for entertainment purposes, but hopefully you were able to learn something new. And if you did, hit that thumbs up button. I really appreciate it. Subscribe for more videos, and I will see you in the next one.